the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares dipped today amid a downbeat day for Asian investors. So if we look at the Straits Times Index, that was down 0.28% at 4,286 points at about 2:45 p.m. Singapore time. And we're looking at a value turnover of 738 million Sing dollars then in the broader market. Now, as we shared with you earlier, the STI closed in the red as well. So let's take you through the closing numbers. The STI closed down 0.21% at 4,289 points. In terms of value turnover, that's 1.25 billion Sing dollars. Now, gainers outnumbered losers, though, 301 versus 228. Top advances for today, we've got for you GMXUSD, iFast and Boustead. And top decliners, we've got here DBS, Combined Will and Ascent Bridge. Well, in terms of counters to watch, we do have Boustead Singapore because the engineering and technology group said yesterday that it applied to list a Reit on the Singapore Exchange. Now, elsewhere from private economists raising their outlook for Singapore's full-year growth to OpenAI agreeing to buy product testing startup Statsig for $1.1 billion USD in one of the largest acquisitions for the ChatGPT maker. We've got more economic and corporate headlines in focus. And joining me on the line today is Dan Chang, investment specialist and trading representative at PhillipCapital. Dan, welcome back to the show.
Hi, good afternoon, Tian Tian.
Great to have you join us. And Dan, let's talk about the Singapore stock market very quickly. How did the STI fare today? Any surprises when we look at the biggest movers?
Well, I think, the STI was in negative territory. It's down 0.21%. But it wasn't actually that bad considering, the macro uncertainty that we are facing now and the 0.7% drop in S&P last night. And I would like to think that, our Singapore market is at least well supported with optimism coming from the upcoming MAS 5 billion equity market development plan, which is still in the pipeline. And as for the biggest mover, right, I think among the big cap, it would have to be ST Engineering. So ST Engineering has been dropping from its all-time high of $8.97 cents since mid-August. That was when they released their earnings. It went to as low as $7.54 2 days ago. Mm-hmm. And today, against the backdrop of the STI drop, right, it was actually up about 1.8% today to close at $7.88. And I think that signals a rebound from the recent downtrend.
Okay. And let's zoom in on some of the counters to watch for today. Dan, we do have Boustead Singapore because the group said yesterday that it applied to list a Reit on the SGX. How significant of a move is this for Boustead? If we look at the counters, price movements, up some 13% when I saw at about 4 p.m.?
Yes, indeed. Actually, today a lot of clients have been calling with regards to Boustead as well. It is one of the notable gainers today. It's up about 12.75% to close at $1.68. So yesterday, right, it has submitted some regulatory application for potential Reit IPO to list on SGX. Of course, it comes with the usual caveat that, the transaction remains subject to approval and there's no certainty that the move will materialize.
Yeah.
This may not be a new news, right? An action taken by the company signal progress in the development of this move. And I think the market is responding favorable to it. And today, it actually touched its 10-year high of $1.32 before they closed at $1.68. And if the Reit listing is going to materialize, is indeed going to materialize, right, I think there will be more room for upside to the share price.
And another counter that we do want to set our sights on, Dan, is Keppel Infrastructure Trust, because according to a boss filing, Keppel Infrastructure Trust yesterday obtained this loan facility with a principal amount of 75 million Sing dollars, but there's no indication as to what the amount will be used for. So how significant is this piece of news then for investors?
Yes, Tian Tian, this is actually very interesting. I mean, it seems like, giving the investor a piece of a larger puzzle. I mean, without disclosing the purpose, right, it actually creates a bit of ambiguity, okay? But, I mean, a business trust like Capital Infrastructure, they typically use loan for a few reasons. It could be for acquisition, it could be for refinancing, or just general corporate purposes. And, we are not going to speculate the usage, right? Mm-hmm. I think the significance of this news actually lies on the financial flexibility that it has shown. Mm-hmm. It means that, Capital Infrastructure Trust actually has access to credit. And securing a loan facilities in this uncertain time, right, demonstrate that the lenders are confident in the KIT's ability to generate cash flow to repay its debts. So, I mean, from that perspective, I would think that it's a good sign, and especially in a time of, high interest rate, as we are seeing now. And it actually gives the trust more flexibility to act on opportunity as they arise, whether it's an acquisition or whether it's refinancing.
And then I do want to look at Singapore in terms of the macroeconomy. Private sector economists, they have turned a shade more optimistic about Singapore's full-year growth in the most recent quarterly survey of professional forecasters by the MAS. So they expect full-year GDP growth to come in at 2.4%, up from 1.7% projection they made in the June survey. What do you make of the latest forecast?
I think this is definitely a significant piece of good news, I would say. I mean, it signals growing confidence among the private sector economies about Singapore economic resilience in this coming year, in this 2025. I mean, when a group of professional forecasters collectively revise their number outwards, right, it's actually not a small thing. I mean, it actually suggests a more robust outlook going forward. And I think the key driver for this optimism, right, is the stronger performance in the manufacturing and export sectors. And I think this is very encouraging because Singapore economy has always been highly dependent on trade and manufacturing. So when these sectors, these engines are firing, it's actually a very positive sign for the broader economy. It suggests that, the global demand is still picking up, and Singapore is well positioned to capitalize on that.
Okay. Now, if you're just tuning in, we're in conversation with Dan Chang, investment specialist and trading representative at PhillipCapital. Well, further away, Dan, let's talk about OpenAI. It has agreed to buy product testing startup Statsig for $1.1 billion USD in an all-stock deal, and this marks one of the largest acquisitions in OpenAI's history. What do you make of the news given OpenAI's soaring valuation right now?
Yes, I think on the surface, right, it might come across as a bit surprising for a company like OpenAI. I mean, with its massive valuation, to spend over $1 billion on a small product testing startup. Okay, but if you did, I mean, that's my personal perspective. Is that when you dig a bit further, right, I would like to think that the deal is not so much about acquiring the company, but it's more about acquiring the capability and the talent that the company brings along. So this setting is specialized in a very critical area, is experimentation and testing. And for a company like OpenAI, right, which is constantly iterating on product like ChatGPT and pushing out new feature, I think this is essential. Okay, the experimentation and the testing is essential. They need they need a really robust platform to quickly and reliably to test new updates on their increasing and massive user base. And I think this will help them to ensure that new features are safe, effective, and don't introduce bugs or degrade the performance. And I think the all-stock deal, right, is also very telling. It means that OpenAI is trying to leverage on its high valuation, which is currently around $500 billion, to make a strategic purchase without using a lot of cash. So this signals that they believe that their stock is a valuable currency and that long-term potential of the company is strong enough to attract top talents and assets.
Okay, and also in focus, then, since we're talking about tech companies, let's talk about Google and also Alphabet. I mean, a U.S. judge yesterday rejected the government's demand, the US government's demand, that is, that Google sell its Chrome web browser as part of a major antitrust case, but it imposed sweeping requirements to restore competition in online search. Now, that landmark ruling came after Judge Amit Mehta found in August last year that Google illegally maintained monopolies in online search through exclusive distribution agreements that's worth billions of dollars annually. How did investors of Alphabet react to the news? I mean, shares up over 7% in after hours?
Yep. And if I may add, right, on top of the 7% rise in after hours trade, as of last check, right, the pre-opening is up another 5.5%. So market is actually receiving it very well. And I think the key takeaway here is that investors saw this ruling as, the best case scenario for Google. I mean, the Justice Department demand to force the sales of Chrome was actually quite what I would call a nuclear option.
Yeah.
A potentially devastating and complex outcome that could have fundamentally crippled the whole Google business model. And by rejecting that demand, right, I think the judge has removed a very massive black cloud of uncertainty that has been hanging over Alphabet stocks for, I think, many years already. And the remedy that was imposed, right, are seen as a less painful alternative. I mean, this change, of course, will also introduce new competition and potentially affect future revenue, but they don't threaten the company core structure.
Okay. Now, finally, before I let you go, Dan, a lot of things happening where Europe and the US are concerned. I mean, we've got a split from Kraft Heinz, which Warren Buffett said was disappointing. We've got some drama going on with Nestle's CEO stepping down. We've got more earnings due from HP Enterprises and Salesforce overnight. So how would you prioritize what to watch out of Europe and the US?
Yes, Tian. Actually, there's a lot of moving parts here. Okay, but I mean, if I have to pick just one thing to watch tonight, right, my focus would be squarely on the earning reports from Salesforce and HP Enterprise.
Okay.
I mean, the Kraft Heinz stories, with the stock split and Warren Buffett's comment is a big deal. Okay, especially for long-term investors in the consumer goods space. The Nestle CEO news is also significant from a corporate governance point of view, but earnings, especially from major tech players, right, are intermediary market driver. They give us a real-time pulse check on the health of the economy. And for Giant, right, I mean for Salesforce, right, it is a big company, it's a giant in the software as a service industry. Okay, so how is customer are spending on things like customer relationship management software is a key indicators of corporate confidence, and their revenue, and more importantly, their guidance will tell us that whether company are tightening their belt or are still willing to invest in their digital infrastructure. And as for HP Enterprise, right, on the other hand, it actually gives us a look at the other side of enterprise spending, the hardware side. Okay, whether company are still buying servers, storage, networking equipment to build out of their data centers or cloud services. So HP Enterprise result will provide a very crucial insight into that part of the tech ecosystem. I mean, in a nutshell, right, well, the Kraft Heinz story and the Nestle news are interesting in their own right. I think the earning report from Salesforce and HP Enterprise have the potential to really move the market.
Yeah, I see. Thanks so much for the insights today, Dan. That was Dan Chang, investment specialist and trading representative at PhillipCapital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.